Now, let's shift gears. Another key thing for audit committees is risk and control. And David, some very interesting activities on operational risk over at Teachers. So over to you.
Oh, well, thanks very much, Don. I first wanted to define what we mean by operational risk. So it's really the risk of loss resulting from a failed process, failed technology, human error, or in fact, an external event. And Don mentioned last year there was a focus on internal controls over financial reporting, which is very important. And I would think most companies today have a fairly mature framework to do with that, but maybe not so operational risk. And why do we think operational risk is really worth focusing on today? Well, from our view, the rapid change in the external market, when we look at the changes in regulatory risk, when we look at technology risk, when we look at compliance risk, all these changes that are happening very, very quickly. So if you have an operational risk framework that allows you to get ahead of those risks, that is a strategic competitive advantage. And I think one that companies should seriously look at. So I would say that operational risk management is a key to your governance framework. And so looking at your governance framework, I'm going to be talking about the 3 lines of defense in the slide, deriving off an operational risk alignment framework, which Teachers uses, and then some related hot topics, being cybersecurity and outsourcing. Just talking a little bit about the 3 lines of defense. The first line of defense, of course, is your business operations. These are the people in the field. These are the people that are running your people, your process, and your technology. They're doing the day-to-day risk management. They're actually the ones that actually own the risk. And in fact, they're adhering to the policies and procedures. They're also reporting on operational risk events, control deficiencies. On the other hand, the second line of defense is more of an oversight function. That oversight function includes your risk management function, your finance group, your compliance group. They establish policies for best practice around operational risk management. They will independently challenge and monitor the compliance. Also, hopefully they're looking to establish an effective and efficient integrated framework for this. Lastly, you have your internal audit group. Now, they report directly to the audit committee, so they're independent, and they can challenge both the first and second levels of defense. So you have these 3 levels of oversight, if you will, and business operations. And the question for an audit committee would be, do I have these 3 lines of defense, and how well are they working together? So is there friction between these 3 lines of defense, which there often is, or are they partnering together? So very important, because who owns the risk? What's the segregation of duties between these 3 lines of defense? Does everybody understand that? And that can also be sometimes a little cause for friction. In addition to that, working together as business partners can be very helpful. So I've just given you an example of the Teachers Alignment Framework. You'll see that we have the risk partners, so the second line of defense, the enterprise operations being the first, and the assurance being the third. What we do in our annual planning cycle is we interview the most senior people in the company, so we're looking at about 70 people, and we say to them, how are changes going to happen in your business this year? What are the emerging risks in your business? The changes that are going to happen in your business, how are they going to impact other businesses within the company? And how is the external environment going to be changing your risks as well? So you can imagine after you interview 70 people, you've got a pretty good idea of what's happening organizational-wide from a business planning perspective, a risk management perspective, a change management perspective, et cetera, et cetera. And what's really neat about it is that hopefully you can now link this back to the strategy and say, how are these risks going to affect our strategy, and how is our strategy going to impact our risks? And the thing we really like about it is everybody is working together. They're sharing all their knowledge. And guess what? The first line of defense, the business operations, instead of viewing the second and third lines as bureaucracy, they go, wow, these are really value added. We aren't getting this assessment fatigue that we used to get, where everyone would be coming in asking us the same questions. These people are all working together to ensure that we actually are planning the next year while looking at our risks. So we find it really, really useful. So I hope that this description is helpful, but then I'm going to move on to our overall governance framework. And a framework like this, enterprise risk management, it'll vary from company to company, but you'll see we have 5 buckets of risk. And one of those key risks is operational. Looking to the left-hand side of the chart, you'll see we have the operational risk management framework. And it starts really with your risk appetite. the risk appetite really drives everything from the identification all the way down to the reporting. So it's really key that you establish that first. On the right-hand side, you'll see our governance framework, and that starts with your operations committee. So our operations committee is made up of business heads, also the compliance area and the internal audit area. And it also works very closely with our enterprise risk management committee, consisting of the senior executives of the company, that report into our board of directors. By describing Teacher's approach to our operational risk management, I'm hoping this will provide you with better insights of how we constructively use it in our business and how we believe it's a competitive advantage. Cyber. This seems to be a really big topic, and I think it's a topic that isn't going away anytime soon. First thing I'd want to say is I don't think any company is immune from cyber attacks. But cyber damage can actually be way beyond just your out-of-pocket. It can actually impact your reputation and your brand. The other thing I think that is useful to think about is how you actually protect the crown jewels in the company. In other words, there's only so much you can do. So what are the really important assets that you want to protect? So first thing, being on an audit committee, you have to say, are there controls in place? How many breaches have there been? How malicious have they been? How quickly have we been able to react to control breaches? Is there any executive in the company who's actually responsible for this area? And is there expertise that we can tap into either on the audit committee, or do we have to look to get outside help? Can you assess the out-of-pocket damages that a cyber attack could result in? Now, interestingly enough, you can actually go out, nowadays it's a fairly nascent field, but you can actually go out and source cyber insurance. And in doing that, the insurance company and the broker will give you a questionnaire which will basically test your robustness of your defenses for cyber. And they'll also look at losses that have happened before in the industry and give you a range of numbers. And this is really interesting because you can get a sense of, gee, is our loss 10 million or is it potentially 100 million? And that I think will help inform a couple of things. Number one, they will give you a sense of where you are from a best practice perspective as they're assessing the risk to figure out what the premium is going to be. And secondly, depending on where that lands, are you going to spend the money on insurance or do you want to spend the money more on upping your game in terms of cyber protection? So that can be a very informative process to go through. The other factor that I don't want to omit is really the education of your staff. We know that a lot of leaks happen internally, inadvertently, and so staff training on cyber is really, really important. You will also have to think about people you invite into the company, like consultants. What protections are there that prevent those people from taking out key information? So it's important that if you're on the audit committee, that you have a comprehensive understanding of how cyber can impact your business and basically what you can do to mitigate the risk. And one of the other topics that I think is very interesting is outsourcing, because many, many companies do this today, and it's probably going to be here to stay. And outsourcing is really taking part of your first line of defense and giving it to someone else to manage. But at the same time, you've got to think about it's my business. So I want the same controls and same assurance over risk that I would have if this activity was inside our business. So, you've got to look at the experience of the outsourcer, you've got to look at their financial strength and their reputation, and you also have to look at their internal controls, and what are those contingency measures that they have from a business continuity. So if they're in the cloud, what happens if lightning hits the cloud? Do they have backup or not? What we do at Teachers, in particular in outsourcing to our external managers, is we actually have a team that actually goes and goes through the operational due diligence exercise for each of our external managers. And when we do that, we basically start with a questionnaire, which they fill out in advance, and then they give us feedback, so we'll know which areas of risk that we want to tap into. In addition to that, we'll assign risk ratings, and depending on the risk rating, we'll know how frequently to monitor the outsourcer. So I think it's really important, if you're on an audit committee, that you understand the framework for assessing the risk for outsourcers and have a pretty good idea of how you can mitigate the risk if something does go wrong. Back to you, Don.
So, David, a lot of information there. I think for many organizations, this thing of operational risk and getting their hands around it they're probably relatively new at it in that particular area. Certainly the framework you provided, risk appetite statement is quite interesting. That's a policy level, so it'll be interesting how many boards and audit committees actually have a risk appetite statement. But I guess the question is, if you're a teachers or a big bank, you can put this in place. But what would you do? We've got a number of in the audience that would be smaller. How do they go about getting, as the audit committee, their hands around this issue of managing operational risk? What would you suggest?
Well, I think the first thing from an audit committee is you would ask your management team, effectively your first line of defense, what have you done to do a self-assessment of the risks? So is there a framework that you can provide to the audit committee that says, we've looked at our risks in these various areas, and these are the ones which we have low impact, medium impact, high impact, and here's the probability of whether these events are going to occur. So that's something which innately you should be able to ask the management team, because they should in fact be doing a self-assessment to figure out where those risks are. A number of those risks may have already been covered off by the work that has been done on internal controls, but there may be some operational risks that actually haven't been discussed at the audit committee level.